A tough day, certainly, for equities. We saw really kind of selling across the board. What does today's move tell you about the environment?
Well, I think it reminds us that there's risk in the environment. There's been well more than 1,000 days where the market's gone without a 10% correction. We have seen very good fundamentals during that period of time, but valuations still do matter. And I think the other thing that I think is critical to watch is what's happening with the dollar. You've had a very strong move up in the dollar. Inflation expectations have moved down. This has everything to do with the fact that the Fed seems to be getting tougher or tighter on terms of monetary policy in comparison with other central banks like the ECB and Bank of Japan. So upward pressure on the dollar, that's contributing to some of the jitters, I think.
Kevin, not to mention that everybody's been kind of talking about a correction, how somewhat of a correction would be healthier for the market. If we get a little bit of a pullback, whether it's 2%, 4%, 5%, would that be better in terms of valuations?
Yeah, I think so. If you look at multiples, we're about 10% or so above where multiples should be. So you could say that valuations maybe are 10% above where they should be given forward earnings. And if you look at the returns in stocks, really over the last couple of years since QE, the last round of QE was kicked in, it's been well over 20%, 23, 24% per annum maybe. So that's not a gain that can be sustained indefinitely. And you actually want to have a market that has price discipline. If it gets out of control, we have a bubble. We know what the other side of that looks like. It could be very sloppy and difficult for equity investors. So we like to see a market that is mindful of the fact that risk still exists and that net valuations matter.
It's a good reminder. Hey, Kevin, one last question. What are you going to be watching for in terms of whether or not this is a more long, protracted decline here?
Well, we've constructed a barometer here that looks at a wide variety of data points. We got, for example, durable goods today. That was a decent number. The other day we got a housing number that was decent. But you really have to look at a broad array of data. The data is moving in the right direction. Fundamentally, we see growth. But if that were to roll over, that would be a problem. If valuations got much more out of hand than where we are today, that would also be a problem. But barring either one of those two things, we're going to stay long equities.